Introduction: the foundation of every real estate brokerage. Every successful real estate brokerage begins with one central figure, the designated broker. Before a single listing is taken, before a contract is drafted, and before a commission is earned, the legal identity of the brokerage must be properly established. This section sets the stage for the entire course by explaining how the designated broker, business structure, and licensing framework work together to create a compliant and legally operating brokerage in Arizona. As we move through this chapter and beyond, remember this: every transaction, every agent action, and every compliance requirement ties back to the broker. If the foundation is wrong, everything built on top of it is at risk. This section connects directly to future discussions on supervision, AAC R4 28-1103, advertising, AAC R4 28-502, and professional conduct, AAC R4 28-1101, all of which depend on proper broker setup. Designated broker requirements and responsibilities. In Arizona, a real estate brokerage cannot legally operate without a designated broker. Under ARS, Paragraph 32-2125, every employing broker must designate a single individual responsible for the supervision and control of the brokerage. This is not a symbolic role. It is a legal obligation with real consequences. The designated broker is responsible for establishing written policies, maintaining transaction oversight, supervising licensees, and ensuring compliance with Arizona law. This duty is reinforced under AAC R4 28-1103, which requires the broker to exercise reasonable supervision over all real estate activities within the brokerage. Consider this real-world example. A salesperson advertises a property on social media without including the brokerage name. While the agent created the post, the liability does not stop there. The designated broker may face disciplinary action under ARS Paragraph 32-2153 for failure to supervise. This demonstrates how the broker's role extends into every action taken by their agents. This concept ties directly into later sections where we will discuss advertising compliance, transaction management, and risk mitigation. The broker is not just managing people, they are managing legal exposure, business license structure, and ADRI registration. Before conducting business, a brokerage must be properly registered with the Arizona Department of Real Estate, ADRA. This includes establishing the legal entity, such as an LLC, corporation, or sole proprietorship, and obtaining approval to operate under that structure. Under ARS, Paragraph 32-2122, it is unlawful to engage in real estate activity without proper licensure and registration. The brokerage entity must be linked to the designated broker, and all activities must flow through that licensed structure. This is critical because commissions can only be paid through the employing broker, not directly to agents. For example, if a real estate team creates a separate LLC to receive commissions but fails to properly register that entity with ADRA and connect it to the employing broker, this creates a violation. Even if the transaction itself is valid, the payment structure could trigger disciplinary action. This structure becomes even more important as we move into later sections involving compensation disclosures and commission disputes, where proper licensing and entity setup determine whether payment is even legally enforceable under ARS, Paragraph 44-101, license numbers, DBA compliance, and address of record. Every brokerage must clearly and consistently use its license name and license number in all advertising and documentation. AAC R4 28-502 requires that all advertising include the employing broker's name in a clear and prominent manner. If a brokerage operates under a doing business as DBA name, that name must be properly registered and approved. The DBA cannot mislead the public or imply a separate brokerage if one does not exist. The address of record is equally critical. The broker must maintain a current and accurate address with ADRA. This is where official notices, audits, and legal correspondence will be sent. Failure to maintain this information can result in missed compliance deadlines and potential disciplinary action. For example, if a brokerage moves offices but fails to update its address with ADRI, and the department sends a notice of investigation that goes unanswered, the broker could face penalties simply for failing to respond, even if the underlying issue was minor. Risk exposure. Under ARS, Paragraph 32-2122 and Paragraph 32-2125. Operating without proper licensure or outside the scope of the brokerage structure creates significant risk. ARS, Paragraph 32-2122, makes it unlawful to act as a real estate broker or salesperson without a license, while ARS, paragraph 32-2125 outlines the requirements for broker employment and designation. Violations of these statutes can lead to denial, suspension, or revocation of a license under ARS, paragraph 32-2153. This is not theoretical risk. It happens regularly when brokers fail to properly supervise, register, or structure their business. A practical example, an agent independently negotiates a transaction outside of their employing broker to avoid commission splits. Even if the deal closes, this is a direct violation of Arizona law. The agent and broker could both face discipline, and the commission itself may be unenforceable. This ties directly into the broader theme of this course. Compliance is not optional. From broker supervision to contract execution to compensation, everything must flow through the proper legal structure. Case law connection, broker responsibility and liability. Arizona case law reinforces the seriousness of broker responsibility. In Jennings v. Lee, 105 Arizona. 167, 1969, the court emphasized the fiduciary duties owed by real estate professionals, including the duty of disclosure and loyalty. While this case focuses on client relationships, the underlying principle applies here. Brokers are held to a high standard of accountability. Additionally, in Lombardo v. Albu, the court highlighted that material facts affecting a transaction must be disclosed, even when uncomfortable. This reinforces the idea that brokers must create systems that ensure agents comply with disclosure laws, another example of how broker structure and supervision directly impact legal outcomes. Bringing it all together. As we move forward into the next sections, remember that everything starts here. The designated broker is the foundation. The business structure is the framework. The licensing requirements are the rules of the game. If these elements are set up correctly, the brokerage can operate smoothly, agents can perform confidently, and transactions can close successfully. If they are not, every deal becomes a potential liability. In the next section, we will build on this foundation by exploring how broker supervision translates into daily practice, including policies, procedures, and enforcement mechanisms that protect both the brokerage and the public. Online discussion. Why is the designated broker ultimately responsible for the actions of their agents, even if the broker was not directly involved in the transaction? Answer: because Arizona law, AAC R428-1103, requires the designated broker to exercise reasonable supervision over all activities within the brokerage. The broker is legally accountable for ensuring agents comply with laws and regulations. How can an improperly registered DBA create risk for a brokerage? Answer: an unregistered or misleading DBA can violate advertising rules under AAC R428-502 and create confusion about who is responsible for the transaction, leading to potential disciplinary action. What is the biggest risk of operating outside the employing broker structure? Answer: the transaction and commission may be considered unlawful and unenforceable under ARS, paragraph 32-2122 and paragraph 44-101, exposing both the agent and broker to disciplinary action.